Nvidia has experienced a turbulent start to 2025. After reaching a record high in January, the stock has fallen 14% over concerns about overspending on AI infrastructure and trade policy uncertainty. The fact is that news and the stock price are not as related as you think that they are. In this video, we will focus on the stock price, not just the news, because the goal of this channel is to help people protect their wealth and to grow their wealth. In this video, we will understand the following. Can Nvidia regain its upward momentum, or could this be an early warning sign of a major reversal? Should you buy the Nvidia dip, or what should you do if you're already holding Nvidia stock? So here I do have a weekly chart, and on the weekly chart I do have the 10-week simple moving average and the 30-week simple moving average. These both help me see the longer term picture of things, of what's going to happen over the next month. And on the daily chart I have the 20-day simple moving average and the 50-day simple moving average. These help me know exactly what's happening day to day, when to get in and out of trades. Before we get into the really juicy material, let's first focus on the earnings. Nvidia has been one of the best companies in the stock markets, no questions asked. And we see very, very huge earnings growth. But there's a trick about earnings that people do not know. Companies are bought based on their future price projections. So whatever price you saw of Nvidia was not what it was doing at that time, but what it should be doing 3 to 5 years from now. And one scary warning sign of growth companies is earnings decelerating. So here, instead of earnings accelerating, because we like to see 40%, then 50, then 60, what is happening is that we have 600%, then 170, then 110, then 80. This is a very bad sign, because the company is growing, but it is not growing at the pace at which the investors expect. And that is why you're starting to see this bearish action. The return on equity is still fantabulous. We like to see anything above 17%. Now onto the more juicy stuff. Everything I will talk about is summarized on the Profit Punch website. So if you want the complete system that finds winners like Nvidia, which did 200%, Appfolio 350%, SMCI 250%, using just 1 hour of your time every week, you can find the full guide linked in the description below. Let's first look at the weekly chart and focus in on that. We see something called a EMA crossover. So whenever there's EMS crossover, it shows that the price is likely to continue in that direction for a very long time. So here you saw that when the EMA went bullish, Nvidia went up a very huge number. Nvidia went up over 900%. Here when it turned bearish, Nvidia dropped 60%. So you can see here it turned bullish, Nvidia went up 500%. Here it turned bearish, Nvidia went down 50%. So now it has turned bearish. What does that tell you? The fact is that you can look at the averages. Here it went down 50%, 60%. From this crossover, at least from the EMA crossover signal, we can say that Nvidia should be dropping at least 50 to 60%. So let's see what that would mean. 50% would be about $62, and 60% would be back to this breakout level. And that makes a lot of sense, because once a stock breaks out through a certain level, that level then turns into support. What was resistance normally turns into support. The next signal that we have to be looking at is something called the relative strength indicator. So if I open up my relative strength indicator, it is down here. If the relative strength indicator fails at the 60 level, this is a very bearish sign. And let's see what happened in Nvidia whenever the RSI failed at this level. If we go back to the past, here we see the RSI comes below its moving averages. Now when it's red, it means they're bearish, and then when it tries to come back and fail at the 60 level, we see a 62% drop. This is in 2022. If we go to 2018, we see the same signal. It comes down, it tries to recover, fails at the 60 level. Again, we see a 60% drop on average. We go to April 2010. These signals keep happening over and over again. The RSI falls, tries to recover, falls at 60%. We see a 54% drop. We see that again in 2007, which was a very huge bear market. RSI comes down, tries to recover, fails at the 60 level, falls 85%. So if we go to the current state of things, what do you think is going to happen? We can see the RSI has clearly failed at the 60 level. So of course, what do we expect from this? From the averages, we know that we're likely to get at least a 50% drop. So back to $60. Very far away from what we are seeing now, but that is another bearish sign. So after that, we can go onto the daily chart and I can show you more in detail some extra bearish signs. So here I have drawn for you some bearish signs of what is happening in Nvidia stock. These are something called trend lines, and these lines can only be trusted if they touch at least 3 points. There is a special signal that you don't want to miss. I'm going to show it later in the video, but this is leading up to that. So here we see a flat support. If we go back in time, it was flat at that particular time. So if we go back here in time, I saw that support a while ago. So here it looked like a flat support. Nvidia comes, it's being supported on this price. It also failed at this resistance level. That was already the first bad sign. Then Nvidia comes and then it falls through this support. So you see there are two supports. There's the flat one and there's this slanting support. And normally what we expect is that when stocks fall through the support, they normally try to come back and test that support and then they'll just continue falling down. So if we move forward, we can see that Nvidia came, tested that support again, tested this resistance, tested this support, failed, passed through. Now we're expecting it to come back and test it, crashes, comes to test that support. It just passes right through, tries to test this support. You see how these prices develop over time, and then it crashes as expected, right? Now that is just the supports. Now onto the final one, which is the most scary. Now the final nail in the coffin is something called a head and shoulders pattern. This is a very clear head and shoulders pattern, and this is a topping formation, and normally means that the stock has stopped its uptrend. And to get a price prediction of a head and shoulders pattern, what you normally do is get the price from the head to the neck. So we can see here the neck is this slanting line. Make sure your price is not logarithmic. I just copy, paste this box, and then I can just move it down. And then this will give us a nice prediction of where the stock price could go. And that gives us about $65. So we are seeing three things which give us around a $60 price prediction. And that means that if you're holding Nvidia stock, I think it's a very good opportunity for you to sell and get out of your stock because there's a lot of negative sentiment and a lot of negative technical indicators. If you are not in Nvidia stock, then it's definitely not a good time to buy. It's not a good time to short it as well, because to short it, you want it to come back and test this crossover. So if it comes back to about $130 at around the crossover level, I think it's going to be a very good time to short the stock. And why do I say that? Let's go back in history and see. Whenever it crosses over, it likes to come back and test, and then it will continue to crash, right? Stocks don't just crash. Here, it did not give us that opportunity. That was sad. But normally they will come back and try to test. Here, since this was more like a double top, from double tops, it normally doesn't come back to test. So this one, I didn't expect to test there. But here we can see it comes down. The test is before the crossover, right? So after that crossover, it just continues going down, and then it tries to recover here. So this is a good shorting opportunity, and then you can go from there. So there are different ways to short, but it depends on how the stock develops. Will it come back and test the crossover itself? That would be a very good shorting opportunity. Or is it going to come in like it did in 2007 and then test the falling 30-week simple moving average? That is also a very good time to short. Or is it just not going to crash and then it will come and recover? That we don't know. But our job is to just look at the price action, forget about the news. The price action will tell us what we have to do next. May the markets be with you.